TheoTrade. This is Don Kaufman. It's November 18th, 2020. There are seconds left inside of the trading session. Sell-side activity hitting the marketplace. And I gotta say, some of this sell-side activity feels very different than any of the trade that we've actually seen surrounding the election in previous weeks. A lot, people, has changed. Let me actually take you into detail on that. One of the things, of course, I'm looking at here coming into the cash close, of course, is the financials. Financials coming off hard and fast. Big time reversal. Now, for those of you that do tune into TheoTrade, we, of course, caught this with, there you go, I'm actually filling a couple of spreads right now. But we actually caught this with an in-out spread. That goes just about one strike in the money, one strike out of the money. This trade is and was effectively put on into today's session. And we were able to actually purchase a dollar-wide spread for 50 cents. The spread's actually widened out to 64 cents. You know, of course, hindsight is always 20/20. There's the closing bell. You know, hindsight's always 20/20. But for those of you that got the text message, that got the push notification, you're good. All right. And we may actually be closing this spread as early as tomorrow if we just had a little bit of continuation, if you will, to the downside. But again, as I was saying, some of the sell side activity that you're seeing, and it's persistent into the cash close, it's of a vast differential from, again, any of the trade that we've seen lately. You know, I was pointing out the financials a second ago, but look down towards the bottom of the screen with me here. And what I'm trying to detail for just a moment is take a look specifically at some of the financials. So you have Bank of America off by the tune of almost, what, 2%. JP Morgan's off. You got Citi and Wells that are relatively flat. Morgan Stanley, that's flat. Okay, dogs and cats living together. Again, it's highly unusual because some of the sell side activity today, it's disconnected. It's completely discombobulated. The other thing that really resonated with me today is the S&Ps took a much broader hit. Of course, then you also see some sell-side activity inside of the Russell, which is something that we talked about in the weekend update, and we kind of anticipated seeing some heavier sell-side activity in the Russell throughout the course of the week. But again, talking about being discombobulated, if you're looking at the Nasdaq and you're thinking to yourself right now, you know what though? Hey, Don, the Nasdaq had outperformed. Yeah, not really. Because here's the area, and this is exactly why I'm saying that this sell side today is unusual. Take a look at the monsters of tech. Now, the monsters of tech is our conglomerate symbol. It's Apple plus Amazon plus Facebook plus Google plus Microsoft. People, the monsters of tech got hit and hit hard. It's down, okay? And it's down by the tune of approximately 1.2%. And if you take a look at that, again, most of your big tech stocks, yeah, they got whacked back pretty good, including, of course, Google off by over 1%, and Amazon and Facebook. Listen, I'm not getting ahead of myself, you know, we're not, you know, per se excited about some of the sell side activity. Yeah, I carry bearish positions. I'm just, you know, trying to highlight here, you know, it's kind of like what's wrong with this picture. So how did the Nasdaq outperform? How did the Nasdaq outperform the rest of the marketplace? One of the key players in here, it's unquestionably, it's Tesla. Tesla's actually masking, if you will, what is a broader weakness right now inside of the Nasdaq. And I'm cautioning you on this particular front because you know what? People are not seeing, okay, the full brunt of what does amount to some degree of damage that has been done to the marketplace. I mean, again, it's been a little bit of time since we've seen any selling, obviously, in the marketplace. But again, your monsters of tech did get whacked back fairly hard. But Tesla being up 10%, again, it's literally masking it. The other aspect here, and I don't see a lot of movement on this front, okay, happens to be volatility. Okay, am I seeing volatility rise? Is it really starting to rip? All right, volatility was down. By the way, this is the 9-day volatility. This is like a short term. It's a 9-day VIX. It rose. But if you're going to see some wicked movement in the marketplace, you would have expected 9-day volatility to really fly. Okay, 3-month volatility. Take a look at 3-month volatility. Okay. Also kind of peculiar because it moved on a percentage basis even more than short-term volatility. So all of a sudden we're starting to pack risk into 3 months from now. And then the VVIX. Oh, the VVIX is just in never land anyway. I mean, we've been in the VAMA zone for, you know, this incredible period of time. And the VAMA zone, of course, is anything north than 110. But, and again, you literally have to go back. This is a 9-month chart. You have to go back 9 months pretty much. We've actually, you know, been alive and well inside of the VAMA zone. Again, even the VIX didn't necessarily take off to the upside. But again, You see the S&Ps came down, and they came down hard and fast into the cash close here. And I'll tell you right now, this is not over. There's going to be continuation in some sell-side activity, okay, even after the cash close. You see the futures are open right now. Was the volume big in there? Absolutely not. 1.2 million contracts, but for the most part, today was completely and utterly dead. And I want to emphasize that. Nothing happened in this entire trading session until the last 30 minutes of trade, where the marketplace all of a sudden was sitting at 3,600 and just went for it. And we saw that, again, fairly wicked sell-side activity and persistent sell-side activity. So we positioned ourselves earlier in the day in the financials. And I want to come back to the financials for a second because, all too often people come back at me, they're like, well, why would you all of a sudden have gotten bearish inside of the financials? Did you know something? Absolutely not. We looked at the financials, okay, and we looked at them in terms of auto expected move. Now remember, I'm not a market technician, okay, but what I do is I am very good at kind of handicapping, if you will, statistical moves. When you take a look at this right here is a breach of expected move to the downside. Here, okay, we have a breach of expected move to the upside. All right, last week, one of the most wicked breaches of expected move to the upside that anybody's ever seen. Okay, there was some follow through earlier today to the upside. We breached above the expected move right here. When I say right here, again, in early trade today, we breached above the expected move, which is one of the primary reasons, okay, that we looked for a pullback. I looked at this and I go once, twice. It is a very incredibly rare occurrence to see 3 breaches of expected move to the upside in consecutive weeks. So I was willing to actually, step out there and put quite a bit of capital to work in this, looking for a pullback. Now, the pullback that I would expect, okay, a little longer term, is back to 2650. In the near term, I just need a hop, skip, and a jump back, okay? And that spread will widen out quite considerably. The other question that keeps coming in is, why did I use only 23 days remaining to expiration? Because I was looking, okay, in the very near term for that kind of action, for that kind of pullback. All right, one last thing in tonight's video that I think is also kind of striking here, and it's something that I actually mentioned, okay, today on TheoTrade. And hopefully those of you that are capable of tuning in did tune into the morning session. I was talking about the expected move right here inside of the SPX. And one of the points that I wanted to make is if you look at most of the previous weeks, let's go ahead and close up this left side bar. Again, some follow through, some sell side activity. We'll close up that left side bar. And I just want to make a very, very brief point. Again, I made this point a little bit earlier in the live trading session. Let's look back at a few weeks, okay? How many times in recent weeks do we at some point during the course of the week hit either the upper or lower edge of the expected move? Now, I've just come back to like a random week. I can come back to the previous week. All right, we definitely hit in this expiration. Definitely hit in this expiration. We definitely hit in that expiration. Here's one. Okay, that's pretty much a gimme. It's been within 5 points of it. Okay, here we hit. Here we hit. Here we hit. Here, absolutely hit. Oh, wait. Here's a week. This is a week. Come on, we got close, but I'll tell you what. I'll give that one a 0. Okay, here we breached the expected move. Here we ripped the expected move. Here we ripped the expected move. Okay, question mark. That's this week. And all that I stated is if you looked back, and by the way, you can count back, umpteen different weeks, okay? Statistically speaking, and that's what I'm about. Statistically speaking, the probability of hitting the upper or lower edge of the expected move, okay, you could really only pick out kind of 1 week, which is right here in any of the recent trade that we didn't clip the upper or lower edge of the expected move. So with that knowledge, okay, I'm telling you that, hey, in the next, Thursday, Friday, remainder of the week, and this is something I was saying this morning, in the next, 72 hours, okay, you got to expect some volatility. And I think a lot of people look, that's kind of crazy. Why not? Okay. I think we're actually going to get some follow through sell side activity. And this is something I'm telling you, it was just too quiet earlier this week. And again, to kind of highlight this week's expected move, the upside and the downside, the upper edge of the expected move is roughly 36.67. The lower side of the expected move this week, okay, it's almost 3,500 on the button. Remember, Okay, we were at 3,600 earlier today. We dropped, not exactly like a rock, but we absolutely dropped some 41 handles in here. Do not be surprised that if you see some wicked follow through here into Thursday and Friday. Okay, the entire, as I said, the tone of the sell side activity has changed. This selling feels different. With that, thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.